All right, guys, what is going on? Welcome to the live stream. Running just a couple minutes later than usual, but hey, it's all good, right? Is everybody ready for the weekend or what? Is everybody ready for the for the weekend or what? Hmm? How goes it, chat? How goes it? I finished. I meant to say this on Instagram. I didn't, but I ended up finishing The Dispossessed by Ursula Le Guin. Pretty good. Probably the first science fiction book I've read probably ever. And I thought it was great. There was a few pages that absolutely just slap. Like just completely slap. Which it makes sense that we did take that low. Okay. There was a few pages right in there that absolutely just take your brain out, throw it in the washing machine, and then put it back. Which I enjoy that kind of stuff. So, but before we jump into today, I said this in the Discord, and I still tried to navigate price with some precision today. Wasn't happening. One of the very first things I did mention to you, chart wise at least, was a chart of NQ, and it was roughly right in here somewhere. And what I was trying to show you was these highs up here as well as these lows down here. And so we were in the middle of that. I was trying to see if I could navigate price in here. I did okay as far as like, what we were going to do, what to expect. And then I was also watching ES, which arguably I liked more when we got around 1040 because of reasons I've already shared in the Discord. This chart was very nice. We had basically what we had yesterday on NQ, where we had accumulation and then a mitigation here, and that to go higher was very nice. Part of me wishes I traded it. I didn't, and it's kind of like, well, damn, like that was such a good play right there. You know what I mean? Like that was such a good play. But I didn't, and that's okay. But do you guys agree? Drop some ones in a chat if you think like that was a solid play. Equal highs, mitigation. Not. I don't think it was a strong. Dow was our strongest index today, which is kind of weird. But at least ES was stronger than NQ, so it qualified as a better candidate for a position than NQ did. Drop some ones if you guys think that was pretty awesome or not. You guys don't always have to agree. Oh yeah, I did turn on member only mode for the chat today, which I might as well also tell you that I'm thinking about changing the schedule. I won't drop days, but I'm heavily considering making Friday a members only live stream and dropping down to 3 free live streams a week instead of 4. It's been 2.5 years of 4 free live streams a week. I feel like that's enough to not quit streaming altogether, but to like cut back a little bit. You know what I mean? You guys have any thoughts on that? Ooh, excuse me. You guys have any thoughts on that? What's good? Felix, Roger, Eberneth, Mason, Sean, Big James, Torty, H, Devin, Marshall. Who else did I miss? Anybody else? It's your 30s talking to you, John? Damn. Wow. That may be true. That might be true. I mean, it wouldn't change the amount of streams. It's just the free ones would go down to 3 instead of 4, and the members would get a stream that other people wouldn't have access to. So it's just a little bit more value that you guys would get for being here. You know, I haven't announced it. I'm not gonna make it permanent just yet, but I've been thinking about that though. That's what I have been thinking about. So, anyways, if I was wanting to trade today, I'd probably short this, but this is just so, it's an abnormal condition to me because we were supposed to have news yesterday and today, but Uncle Sam decided to take a nap, so everything became screwed up. And they took the stuff off of Forex Factory. So yeah, we were supposed to have some news that got pushed. And so to me, I can't remember a time that I was trading. Thank you, Sean. I can't remember a time that I was trading during a government shutdown. I think I have before, but I think it's been such a long time that I really don't remember off the top of my head what actually happened. So this is a little bit weird to me. So, and then on top of that, just look at what we did today. You know what I mean? Like, look at what we did. I wouldn't say this was awful, but it was just very unclean, you know? Where we had our opening in regular trading hours, we have our gap here, right? There's 310, there's 830. So we have this little gap here. We end up extending a little bit higher for NQ, right? We don't end up taking Thursday's high. We just leave that there. We trade back into the range from yesterday, right? This range here. And on a small time frame, these markups aren't going to make sense on a higher time frame. But on a 1 minute, right, we get this movement down here. And this is just a very simple drawing to understand that we have a intermediate term low here. And so we do start trading higher off of that. This is a 1 minute inversion here, which I like to go higher. We get one more retracement back to 50%, which I didn't think we should have done that, but we did. And all that is 50% of the range from this high down to that low, right? So if you cut that in half, that's this level here. So the market treats 50% like it's fair value. It treats concepts below that like a discount. So it's like, okay, well, for now, it looks bullish. For now, it looks like it wants to trade for our equities open high as well as Thursday's high. It looks like that, right? But looks are deceiving, Chan. Looks can be deceiving. All of my exes are examples of that, but we won't spend a lot of time on that, okay? Well, I'm here for you. You're not here for me. All right. With that failure to take Thursday's high, ES is higher. We get those equal highs, and then we get a 1, 2, 3 formation right there. So not quite a soup. Not quite a soup, but, you know, NQ doesn't catch up. We trade back into the range, and then right at 12 o'clock, we rip ass. We retraced. Now, a few minutes ago, the reason I said I would short if I wanted to trade was mainly because of this here. Right? You have, it's not a suspension block, that is a potential mitigation. Right? Those highs, the low here to then go higher with that 1, 2, 3 formation. That here, to me, that seems like a mitigation. 4, running out today's equities open lows rather. See that? That is sell side to me. So we ran up, traded into that, off of it a little bit, rallied, and it is a little bit lower. So I don't know. It's a weird day. It's not, I wouldn't call it bad. There was still opportunities, but I just don't think it has been the greatest of days. What do you guys think? Sean, it is not. It is not. Government shutdown is not a regular thing in the U.S. So, not that we are going to get into, politics and all that kind of stuff, but the left, the Democratic side, are very emotional versus, I mean, everybody has emotions, right? But it's just liberals and the left are typically more offended and always, a victim of everything. And it's, they're a bunch of crybaby little bitches, but that's just how it works. So I mean, I could be totally wrong about them, and that being the reason why they're shutting down, but it would make sense to me. So I don't actually know what happened though. Maybe they walked out. Maybe they just said, fuck it. I don't know. But I'm more concerned with price and, trading than all that other political stuff. Because I think all that's bullshit. Post London was barcode. Yeah. Yeah. So, how many of you, because we don't have too much chat participation today, you guys suck. How many of you watched the suspension block video that I made the other day? Did you guys watch that? Drop some 2s in the chat if you guys saw that video. Do you know what a suspension block is? It's a new concept that I learned the other day. It wasn't something I created or invented. If anything, it was a little weird to me at first. But we have one like right here. I think these little 2 gaps right there, that together, we do trade outside of it and then it becomes reclaimed to go lower. I was looking at that earlier today. I was debating on whether I should bring that up or not. So that right there. Again, we trade outside of it a little bit and then we reclaim it here and then we sink to oblivion. See that? So shorting above old highs, right? I guess that in hindsight wasn't terrible. Okay. So yeah, that's what I'm studying now and moving forward. But I don't remember if I said this in a video or not, but me personally, I really only see that on NQ. I really, unless I'm just bad at spotting them, but I really don't see that happening a lot in ES. I see that happen in NQ more. But that's just personal studies. But what do you guys think of it? Do you think it's cool? Do you think it's something that you would potentially implement into your trading, or do you think it's retarded? Let me know in the chat what you guys think. I would love to hear your thoughts. Bodies respecting that imbalance. Big supply and demand concepts there. Big old supply and demand concepts on that one. Sean said catching up this weekend. That's fair. That is fair. You know what though? This is this is this is very late, of course, but this is looking exactly like a market maker sell model. That's probably why my instinct like kind of clicked off in here. I'm just not all that interested in trading today. Definitely one more added confluence. So what we're going to do, because right now I want to teach with live price, but what I really want to get into is the notes that I jotted down yesterday. Today I don't think is all that phenomenal in terms of investigating like what we've done. You know, ES, yes, I think ES is a wonderful study for the longs to go up here, for the shorts here, and maybe for the shorts here. But yeah, this looks heavy. And anybody that was long this morning, if they did not take partials or move their stops, they are about to get bodied. They are about to get bodied. Let the bodies hit the floor, chat. I think it's just another name for putting two gaps together. Well, yeah, that's why he said he called it a suspension block, because it's a candle that's suspended between two gaps or two volume imbalances. But I mean, hey, you're allowed to have your own opinion. It's fine. It's overrated. Yeah. I mean, I believe break of structure is overrated. You know what I mean? So we are all allowed our own opinion. Your opinion's not gonna be wrong. Unless you're just a silly goose. Took a little break for the week. Says Alex C. Excited to catch up this weekend. Yeah, there's nothing wrong with that. There's nothing wrong with that. Okay. Excuse me. I would have made this a market review yesterday, but it would have been a very long market review. So I kind of want to blend what the concepts were yesterday as well as the thought process while price was panning out. Does that sound like something interesting to you guys? Drop some threes if you kind of want a picture here of yesterday. It's going to be hindsight, of course. It's going to be yesterday's price action. But sort of going, okay, this is what's happening, and these are the concepts, but this is also what the thought process is behind it. Sort of like the story, right? Like what I'm doing right now, basically, I've outlined like, oh, we have lows down here. This is looking like a sell model. You know, this was a mitigation. This is looking, you know, heavy. Anybody who was long today, you know, two all-time highs, if they have not, you know, taken partials, moved their stops or whatever, like they're fixing to get bodied, right? And I'm very quickly, very briefly giving you the evidence of why I believe price is going to trade lower. But for yesterday. So I guess we'll come back to this in a minute. And if you would like, I totally forgot what level that was for ES, but if you'd like, you could put an alert down here too at 24,992.75 for NQ. That is regular trading hours lows from yesterday. This market looks heavy too, arguably more heavy than ES. So, okay. I'm not sure how to do this because I have not done this type of lecture before. So we'll try it. We'll try something new, and if I flop, then I flop. But no reward, no risk, right? Or whatever it is. Okay. So yesterday, with the tweets and stuff, the tweets I dropped in the Discord, you're more than welcome to put them on your charts. I recommend to do it actually. But I want to walk through what's like happening down here and why I was looking for longs yesterday up to that, as well as that imbalance up here. So if you I don't know what goes through people's heads when they're looking at a chart. Okay. I don't know if you're thinking, well, it should do this, it should do that, or I'm gonna wait for this, wait for that. You know, I don't know what goes through your head. Okay. I only know what goes through mine. When I'm watching the markets, when I'm watching NQ and I'm also watching ES, as soon as, right, we make a new low on one, I look at the others. Are they following suit? Right? NQ's lower. Does ES go lower too? Vice versa. ES makes a lower low, and I look at NQ, and it's like, okay, does it do the same thing? Yes or no? And so one of the first things is not just like, oh, we left behind some low resistance highs, but how we make the low is very important, right? It's always manipulation. Now, in this particular case, I mean, yeah, a sweep of this low is manipulation, but ES trades lower here while NQ is higher. So in this instance, the low has been set, even though it is a higher low. Okay. So that's important because why? NQ is leading, and it's going to be hard to draw this out. I'm not really even sure. I'm really not even sure that I can do this, honestly. Like the way TradingView has their drawing tools, it's trash. But this is kind of how I have the notes. You might not be able to see it very well. I'm trying to do this a little bit better. It's more like sort of a drop down, if you will. So here, let's do this. Here's the thought process, like in here, okay? Once we make a higher low and we start to trade a little bit higher. So my thought process is, okay, NQ is leading against, I can't write it all out because we're limited on space here. NQ is leading against ES. Okay. And then I also have a drop down arrow saying, okay, we also have NQ with low resistant highs. Again, I've actually written this out on a piece of paper. I can't do it all here because there's no room. All right. And then I do, there's actually quite a lot of drop downs, but it's NQ low resistant highs, which is target, right? And then I also do another drop down and I write the retracements after a divergence. See, I told you we weren't going to have fucking room. Retracements after a divergence, those are the opportunities, right? I tell you guys that all the time. How do we know if lows are going to be left open? Like these? Oh, go back a little bit. How do we know that these lows are going to be left open? The divergence, right? So the retracements after a divergence have formed, those are going to be the opportunities. So, you know, test that law, if you will. Test that idea, if you will. Was that retracement here an opportunity? Well, yes. And we had a few things in here. So, number one, I'm not sure if I mentioned this in the market view last night. I think I did. It is possible, Chad. You'd have to double check. But this basically became a reclaimed suspension block. Right? I know that's weird. It is. But the precision is You can't argue with precision. You know, you just can't. You can argue with me, you can argue with your fucking mom, but you can't argue with price action, right? It is what it is. So we basically also have an inversion model here as well, right? We have this imbalance, not to a liquidity run or a liquidity sweep. We have the last imbalance prior to accumulation. So this becomes an inversion, and it even taps into the again, the suspension block, right? And it stops right at 50%, and the body's respecting that. Supply and demand, right? Supply and demand right there. Boom. Look at that shit. Sorry. I've had a lot of caffeine today. Boom. Rallied. Then we get some lows. Did I wake you guys up yet? Then we get some lows, right? And if we extend this mitigation over, right? We respect it here, but we make like some short-term lows. So the market does trade right below that. And then watch this, more supply and demand shit right here. Look at that. Right? John Phibbs, supply and demand fucking concepts, baby. Look at that. Look at those bodies right there. Just so happen to respect halfway, right? Right? All the buyers came in and we all decided to close price. We all decided to stop buying right there. And then we resumed buying again, right? Right. So anyway, and then right after that, that was the tweet saying, hey, stop run to go higher, NQ speculation. And then what do we do? Whoop, higher. Right up here. Okay. Now I'm going to give you some more notes, but that is another thought process, right? And I'm literally giving that to you. I'm giving it to the public for free, saying, hey, well, that looks like a stop run. Now we should go higher. Almost no drawdown, like one tick, maybe two ticks at the most from that tweet, and then we ran higher. Like, come on, that's precision. That's elite precision, right? No ego. It's just put the tweet on your fucking chart and tell me I'm wrong, right? Prove me wrong. You know, I had to join, what's that shit called? TP USA, right? Turning Point USA. Prove me wrong, right? Prove me wrong. Show me that's not elite precision. Okay. So again, down in here, NQ is leading against ES. So it's stronger. NQ has low resistance highs. That's a high probability target. Retracements after the divergence are going to be the opportunities, right? So think about that. That retracement, is that an opportunity? Yeah. These retracements in here, is that an opportunity? Yeah. Now, you would have got knocked out if your stop was too tight or if you went break even too quickly, right? That buying below that low, these lows in here, is that an opportunity? Yeah. We rallied, retracement again after I already tweeted that we're likely to go higher, that I think we're going to go higher. Is that a retracement right there? Yep. Is that a retracement right there? Yep. I don't even know what that traded into, but that is a retracement to go higher. You see that? So this is why that storyline, damn, the text is kind of big. But you guys sort of see the ideas here. We're leading against ES. We have a high probability target. What we want to do, we don't want to buy on the way up. We want to buy on the way down. So we're going to wait for retracements, right? No rushing. We don't want to rush. Stillness, patience, discipline. We want to wait. So we wait to buy on the way down. Wait to buy on the way down. Or wait for the stop run and then get in right after. How many times have I told you the best opportunities are after everybody else gets knocked out? Time and time again. That is a well-known thing in today's world, right? Short-term low, taken. Retracement after that, opportunity. Accumulation. Retracement after that, opportunity. Retracement, opportunity, opportunity, opportunity. Okay? Manipulation here, manipulation there, and some of the greatest setups are right after that. Do you see why? And again, when it comes to the ego and stuff, sometimes I tweet and it's not accurate, or I don't time it very well. It's not always, you know, I don't try to do that all the time. But in yesterday's case, that was a thing. I was saying, hey, manipulation to go higher. That's a very well timed tweet on purpose. Okay. Now there's a little bit more notes for you. Okay. But do I need to slow down? Am I going too fast for you, chat? Or are you guys understanding this so far? The thought process. This is what we've done. This is where we're likely to go. How are we going to get there? Well, we're sure as shit not going to do it in a straight line. Most likely. So instead, we need to wait for concepts to form. While we wait, we can look at previous concepts that would otherwise be bearish, right? But we would expect those bearish concepts to fail, right? Like, for example, oh, we have an imbalance. Oh, well, that's just going to, you know, trade into that to go lower. Doubt it. I doubt it, especially if it's under accumulation. So we expect that to fail. Then we can anticipate that as a inversion. Okay. Or like these up candles, for example. Oh, well, that's the order block. That's the fucking whatever candle. And it hits that to go lower. Oh, that's a short. No, it's not. No, it's not. It trades right through that. And then what becomes an inversion? Right. We anticipate certain things to fail. They can be sensitive a little bit, sort of like my haters, right? Sensitive more than they should be, right? But once they're disrespected, we anticipate, well, it ain't bearish, so it's going to be bullish. That's not hard. That's not difficult. Okay? So, oh yeah, I got more over here. Sorry. I meant to add this. While we watch live price. You gotta love that. You got to love that. All right. So specifically in regards to the tweet, okay, when those lows in here got taken, then it's like, okay, another drop down here, sweep the lows. Oops. Can't spell. Lows. There we go. LOW. And the last one is after those lows get swept, okay, now we should run to the highs. So you see how that works? And that, again, I'm trying to fit everything in one screen. It's impossible on a 1 minute time frame, but you guys see that thought process though, right? Leading, we have a high probability target. We're going to wait for retracements. If the retracement, you know, sweeps a low internally and then rallies right off of it, we saw expansion lower with expansion higher. D-Trades taught you that as a potential reversal. Right, so that's right there. So now after that, we should go higher, and we do that. Right? Now that is the portion of the notes that would be labeled as technical analysis, right? So that is the technical side. Now, during this time, okay, there's some other things that I've also written down. But before I move on to that, do you guys have this stuff already? Do you have this written down so far? NQ leading against ES, drop down. NQ has low resistant highs. Drop down, retracement after a divergence, those are the opportunities. Drop down, right? We swept lows. Drop down. Now that we've swept lows, we're going to run to the highs. So this is sort of like the storyline of the PM session yesterday. Or actually, that started like at 10. That's like the storyline from accumulation up to that imbalance yesterday. So drop some 4s if you guys are good so far. If we can move on. Can we move on? Welch's grape flavored ghost today, just so you guys know. Not paid sponsorship, but that's what I'm sipping on. That purple stuff, right? All right, excuse me. So now we'll continue on with some more notes. All right. As we watch NQ. Actually, let's check ES really quick. I just want to see what she's done. Oh, look at that. We're fucking lower. Damn, chat. Damn, chat. Mm. Mm-mm-mm. All right. So this was it was a little bit afterward, to be honest, like because I went back and wrote that second half a little bit later, but the very first thing is patience. Okay, so this is going to be a little bit more of like a mindset thing. Call your fucking mom. Call your mom right now and tell her who's daddy. Who's daddy, chat? See how easy that was? See how easy that was? Run to liquidity. Bam. Big bang. This ain't science class, but we just got some big bangs, didn't we? Cool. Now we can focus on the notes. I can't even finish the word patience. Ain't that ironic? Okay. There we go. Patience. All right, so the patience, then we have a drop down of, really it should be in red here. Rushing leads to, I can't write it all out, but rushing leads to mistakes. Okay. By rushing, you are going to lead to mistakes. Meaning, if you try to trade before the range has been created, if you're trying to short before a high has been taken out, if you're trying to long before a low has been taken out, or if you're trying to long before evidence of accumulation, then you've rushed it, right? You've rushed thinking that the low has been set or thinking that the high has been set. So instead of rushing what we want to do, right? Why would we not want to rush? Because what we want to do is avoid, okay, is we want to avoid early traps. I really should have made this a little bit smaller. Avoid the early traps. Remember, we talk about this all the time. 8:30 to 9 o'clock, the first 30 minutes Central Time, the first 30 minutes, equity's open. That's where a lot of people get tripped up. They're rushing, they're making mistakes, they're impulsive. You know, that's where liquidity is going to form too. And it's almost, at least for me, I can't speak for everybody else, but it's almost always better to simply wait for the range to be created and then either trade near the low end of the range or at like low end of the lower end of the range. You know what I mean? Unless you want to take later entries, it's fine, but avoid early traps. And then the next drop down to that is the sniper mentality, right? Sniper mentality. Okay, so patience. Rushing leads to mistakes. Avoid early traps. Sniper mindset, or sniper, either mindset or mentality. I wrote down mentality, but you can write whatever you want. Okay, now this one's a little bit different because I've actually extended this first particular drop down under wait for the range to be created. Right? Oh shit, did I skip that? I did skip that, chat. The first one wasn't rushing leads to mistakes. See, rushing does lead to mistakes. The first one was wait for the range to be created. I kind of fucked that up for you. I'll have to write this in here then. Sorry, I got excited because all those lows got smacked. Wait for the range to be created. Then drop down. Rushing leads to mistakes. Drop down. Avoid early traps. Drop down. Sniper mentality. Okay. Now, under that same drop down, okay, of this one, this first one up here, I did another one, which is by waiting for the range to be created, right? The range creates the low risk setups, right? Once the low's been set, once the high's been set, now we have our low risk setups. Low risk setups. Okay. We have to practice patience, allow the range to be created. Once that is set, now we have low risk setups. That's what that is. LRS, low risk setups. Now, here's where it gets pretty fun. Okay. And now we should do green. Those low risk setups. Watch this. Drop down. Small. I'm going to say drawdown. Okay. If incorrect. All right. I'm using symbols now because I can't write all that out. Small drawdown if incorrect. Same drop down under low risk setups or low risk trades. No anxiety, right? No anxiety from over leveraging. I mean, I guess you could over leverage if you wanted to. I don't recommend it, but if it's a low risk setup, then over leveraging won't hurt you nearly as bad. Over leveraging on a large setup, that's where you're gonna get a new one. All right, but if you have a low risk setup, if you take a trade, or if you're thinking about taking a trade and it's a small loss, if you're wrong, then there shouldn't be any anxiety, right? And again, with the low risk setup, our third drop down here is large reward. So we'll do like an up one. Large reward if correct. Okay. Drop some fives in the chat if you guys are with me so far on the second half, right? So patience, and then it was drop down, wait for the range to be created. And then the first drop down was rushing leads to mistakes, avoid early traps, sniper mentality. The second drop down under wait for the range to be created was the range creates low risk setups. And then the low risk setups, small drawdown if wrong, no anxiety from over leveraging, and large reward if correct. Now here's the last portion. As we see destruction in the industry, look at that. As we see carnage. Didn't we say the bodies will hit the floor? Bodies have hit the floor, chat. We may not made a low, but bodies hit the floor. That was such a beautiful market maker model too. Look at that. Real quick, before we get to the end of our notes, chat, was that not, I mean, I was a little bit late to like looking at that, but is that not just super clean? Right? There's your terminus, right? But look at that. Consolidation, reaccumulation, manipulation, right? And then the reaccumulation on the buy side of the curve becomes what? You extend that over, it becomes distribution on the sell side of the curve. Up candle, distribution on the sell side of the curve. That's just so crispy. Yeah, Akinola, steamroll. Steamroll there. Steamroll on stream, live in advance. Pretty cool. I probably should have traded, but I at the beginning of the stream, I was saying I'm probably not, like, I'm not really interested in this. So it's all right. Setups occur every day. We got all next week and a week after that and a week after that and infinite. So it's fine. But in my journal, I will say though, like, today was a phenomenal sell model in a day that really should be a reversal too, because like one of you pointed out earlier, it was up all week, right? Look at that. It was actually up since last week too. Friday last week was up. Monday was up. Tuesday was up. Wednesday had a little shake and bake, but it was up. Thursday was up. And then so Friday should be a reversal day. And if it is a reversal day and we have equal lows or low resistant lows and a sell model, that is the most highest probability you could ever trade, in my opinion. You might think otherwise, but to me, that right there, like, that's it. That's the short. Either here at the accumulation turn distribution, or the last these two up candles right there, right? Go back. That was at 12:30. I mean, this is all during the stream today. You could rewatch today's stream. We talked about this. Right after we got that reaction, I'm like, oh shit, that's a mitigation. On a 1 minute. This 5 minutes sucks. But the 1 minute, I'm like, yeah, that's probably a mitigation. Bam. Slam lower. Beautiful. That's just so... Man, how do you not love this shit, chat? How do you not love this stuff? Okay, here's the last part. It's real quick and dirty. All right? Real quick and dirty. There is 4 check boxes, and it's not like something you have to check. It's what I wrote, because that's what I felt like doing, so that's what I did. All right, there's 4 check boxes. Those are supposed to be square. All right. So the first thing is that NQ is the strongest index. I don't know. Dow may have been stronger, but the point was NQ was stronger than ES. So NQ is strong. It also has the high probability target, which is those low resistance highs. High probability. I'm just going to draw a target. Boom. Strongest index, high probability target. We do have low risk setups. Right? Because we talked about that. Compare this to the rest of your notes. We already talked about this. Low resist the highs. Low risk setups, though. Retracements after the divergence, remember? Those retracements after the accumulation, those are low risk setups. And the higher time frame is bullish. Okay, so what does all this do for you? Can't move it over all that much. Strongest index, high probability target, right? Low risk setup or setups. Higher time frame is bullish. So what are we doing here? All of this, okay, is what? It is evidence for a trade. You see how we did that? And there's more to it, obviously, but keeping it very simple, first principles, it's the strongest index. We have a high probability target in the middle of the range, right? Or slightly below mid-range, whatever it is. We have low risk, high reward setups, and the higher time frame is bullish. So we've aligned with the higher time frame. We picked the strongest index, and we pick low risk setups within that. That's how you get banger trades, okay? Now, you guys know this, but take that information that I just gave you, okay? Take what I just gave you and go look at, you could do that with today too. Not that specific, but with NQ from yesterday, right? Take it, go and take everything off your chart and say, okay, well, this was accumulation down here. So that means once we got a little bit of reaction, right? Okay, the range has been created. We already have the high of the day. That's the most obvious. It's harder when you're trading lower and you're anticipating the low of day, right? And then what's right near that 50%? What's in a premium? That level of liquidity here, right? So what was law number 1 in 48 laws? Buy low, sell high. What's down here? Low. What's down here? Low. What's up here? High. So we followed law number 1, buy low, sell high. I don't know all the laws at the top of my head, but the low resistant highs, that's got to be something. That's got to be one of them, right? And take all the notes that I just gave you and go look at that stuff, because this is how you find really, really good opportunities. And that's exactly what we did here today too, live. Even though I didn't press buttons, right? But do the same thing. Write it out. Go, okay, ES, here's how I would do it. Do you guys want that, or do you want to go home? Do you guys want some notes on ES? Like how I would have documented this personally? I can tell you how this would have went. I wouldn't have shorted up here because of it being strong. I probably would have shorted this. I would have probably elected to short that. I would have gone to micros probably if I was trading this right here a little bit later, personally. But right, Felix, but probability on our side. Right, we're trying to stack all of the evidence in one direction. That's what a high probability trade is. It's more likely to do one thing over another. It ain't 50-50. It's more like 80-20, 90-10. By the time second stage of distribution is coming down here, it's like 99-1. It's damn near impossible to lose something like that, right? Because of all the supply in the market, right? All the supply has to come down to demand, right? So it's high probability. But anyway, if this were me documenting today, I really watched NQ way more than I did ES today, so it would be hard to say. But I would say 67.71.5 is low resistant lows and equities open liquidity. So that's doubly good, right? It's not just sell side. It is sell side and also equities. That's doubly good. Then I probably would have documented the mitigation here, right, to go higher. And then I would have probably documented like, okay, we have equal highs here, but what do we do? Because this is all-time highs, right? So I'd probably say I need to wait for more information before I short. So then these three higher highs up here, I'd say, okay, we got a 1, 2, 3 formation. I may not be so confident shorting that because NQ may have wanted to trade higher. So I would have foregone shorts up there personally. I would have said, I need to wait for more information. And then at 12 o'clock, we dominate lower. And right here, it's like, okay, 12 o'clock gave us volatility. We crossed 50%. So now it's shown the market has tipped its hand to you. And now we also have a range, right? So you might, in here, I might think, okay, the high's been set. Maybe. If I think it's been set, I'll take a trade. If I don't think it's been set, I need to wait for more information. And this is why I told you like a couple years ago that crossing of 50% is very, very important, because that crossing of 50% is, in the way that I view it, that's the algorithm tipping its hand to you. It's saying, hey, look, bitch, I've crossed down into a discount, but I'm going for those lows. So you better get out of longs or your ass is grass. Okay, cool. If anybody that held on too long, right, where's the best opportunity to get out? If not above and on high? A mitigation. That's its function. The function of a mitigation. Go rewatch that stream. I told you that years ago. That's its function. Is for anybody that has been long, if you didn't get stopped out on something like this, The algorithm's going, okay, I've already switched sides. I've already, done the shift in the state of delivery. I've already done this, that, and the third. Now I'm getting ready to take price below those lows. This is your chance to get out of longs. This is also your chance to short, or both. So then I would have said, okay, where did we accumulate last time? Right? And that's why I did not like the 5 minute. Go back to the beginning of the stream. I did not like the 5 minute, how we did. We didn't have any down candles that I liked, but we had a series of down candles on the 1 minute right here. Beautifully, right? Consecutive bodied candles here. So it's like, okay, that is the parameter of the mitigation. And then do we have anything inside of that? And that's why earlier I pointed this out right there. It's not exactly, it's not resting within it entirely. It's just a part of it, meaning we have an imbalance with that gap here, and that overlaps with the low end of the mitigation. So I would say, okay, after we cross 50%, now we need to wait for a return back above it, because that's a premium market. I don't want to, we can short in a discount, but if I can get a premium, that's much better pricing. Law number one, sell above 50%. Can it go back up here? I mean, it can, but look how much business it's already done. It worked the 67.94 level a lot already. It worked the 6,800 and the mid 90s. It's already worked that level a lot, right? We get a lot of commerce here. Prices printing here. It's printing on both sides here. There's no real like significant imbalances or anything within this. Okay. Other than like maybe the last one here. But anyways, the point is the market going to trade back up here? It shouldn't. It should absolutely not do that. We have an imbalance here. We've got this one with the mitigation, and then we have the breakaway right here too. So we should not trade into anything up there. That's too high of a premium. It's too high of a premium because we've already crossed 50%. We get back into it, that's the opportunity. Risk probably to that high, or maybe a little bit above 25%, which really should be 75, but who cares? Okay. Then I'd say, okay, this should be the second leg of distribution. So now, do we react? Yes or no? Then once we react, okay, now down candles should outdo up candles, and the up candles should be sent or should be sending price lower, in which they do. So does that make sense? I know that's kind of a lot, but the basics, that's what that would have been. We have equal lows, but I'm not ready to short. Okay, we crossed 50%. Now I'm ready to short. I'm not going to short at the low end right after a big ass run. I want to see, does the market provide me an opportunity? That's the hardest part, okay? That's what a lot of people struggle with, and I can tell, right? It's the patience side of it. And that's why I told you earlier, wait for the range to be created, right? And then once that range is created, now we have low risk setups. There's your high probability target. There's your high resistant highs, which is more of a what? Stop loss. That's a target. So if we have a stop loss, the market shouldn't go up here, but we have a target, the market should go down here. That means we have stacked probabilities. We are more likely to go lower than we are to go higher, right? Crossing of 50% makes that even more so. We get back into a premium. Now we can short those concepts or wait for a reaction and then short the concept off of the concept, like a secondary type entry. I forget what we called that. I don't think we ever really had a name for it. You know what I'm talking about though, right? Drop some sixes in the chat. A concept that is created off of another concept. Y'all know what I'm talking about? I don't remember what we... I guess we never really gave it a name, but it's like, okay, the mitigation right, sent us lower and we traded higher to get there. So now we have those up candles. So the up candles should be sending price lower. So you sort of know what to expect before it gets there. This big ass imbalance should be left open in part, right? We shouldn't trade to the high end of that. You know what I mean? So yeah, distribution, right? Accumulation turn distribution. Shouldn't trade up there. And then those concepts, or the up candles here, that concept there to go lower. And then the gap. And that's it. Yeah, there might be an inversion up here too. Well, I don't know what time frame you were talking about. But I don't know, the 5-minute just doesn't look good to me here. Arguably the 15 looks kind of like, this looks pretty awful too. The lows are the only thing that really looks good on this time frame. Honestly. But yeah. This stuff is just so good, man. You know what I mean? It's just too good. How can you not like this stuff? How can you not like it? Imbalance here turned inversion. Look at that. This is all the stuff that's available to you, Chad. That's like kind of what I'm trying to get at here. You know what I mean? All the laws still work. All the concepts still work. It's just a matter of waiting. You do, okay, here's the last thing I'll say. You do realize, okay, watch this. The lows were created at 9:03, okay? We did not run the lows that were created at 9:03 until 12:46. Not quite the 1 o'clock macro, but very close. So that means, right, how long did that take for that to happen? 3 hours and 40 something minutes. Okay? A little over 3.5 hours, almost 4. So if you get to the charts and it's only been 10, 15 minutes, do you really think that a setup this high probable has formed yet? Look what needed to take place. Okay? The lows had to form. So we had to form the target. We had to go higher, but then the market created equal highs. So then the market had to form the equal highs and then run that liquidity. It had to take that liquidity and then form high resistant highs. Okay? Then it had to show like willingness of bearishness, inversion model, Judas model or whatever, something to that effect. Then number 5, it had to cross 50%. Then number 6, it had to come back into old accumulation or reaccumulation to turn distribution. So it had to form these things in a row before the second leg of distribution. So that's the hard part. Have you ever noticed that? Okay, this will be the last thing. Sorry, I know I keep doing that. I can't help it. It's Friday. We're fixing to do whatever we got to do. But the second leg of accumulation or the second leg of distribution is like essentially the last move, right? It's after everything else. The hardest part is waiting to see what happens, waiting to see what happens, waiting to see what happens, waiting to see what happens. Okay, now the evidence has been stacked. We saw the buy side of the curve. Now we're on the sell side of the curve. But just because we're on the sell side of the curve, that doesn't mean we short. We have to wait for a retracement. That's the hard part. That's the part, because that's when you start doing shit like, well, we have all these imbalances here, but I'll take the lowest one because I just want to get in. Okay. And when you do that, now you're being dragged because the market is coming up here to allow smart money to mitigate those positions that are going to be underwater in the next move going lower. So you have to suffer that drawdown. And then guess what happens? The market comes back your way, makes a new low, and you go, okay, oh my God, thank God. Thank God that now my trade's finally in profit. And then boom, it comes right back up and you go, oh shit, I'll just go break even then. I'll just get out. No worries. And then what happens? The market sinks and you would have made a lot of money, or you would have passed that combine or challenge or whatever. But you got in too early, you jumped the gun. So again, guys, you have to look at not just the amount of time, right, that it takes for certain things, but when do the setups form? And look at that. The amount of time it took on the buy side, it took like half the time on the sell side, right? Stocks fall faster than they rise. I wonder if that's a law. Could be. I don't know. You guys watched the video. You tell me. The sell side was quicker than the buy side because stocks fall faster than they rise. So anyways, that's going to be it, man. That's going to be it. You know, trading, it takes a lot. To me, it takes knowledge, okay? But just because you have the knowledge doesn't mean you know how to implement it. That's a very big thing in trading. You can know all the concepts. You can know all the stop loss placements. You can know all the entries. You can have all the risk management. You know, 50 points here, 20 points, or $20 a point here, $50 a point here, whatever. But if it comes down to the patience to wait for a setup, the courage to execute the setup, and the patience for the setup to pan out, you will not trade well. You guys picking up what I'm putting down here? Drop some. Did we do sixes, or you guys didn't drop any sixes? Man, you guys are frauds. Drop some sevens in the chat if you guys liked the stream today. It's not just about knowledge. It's not just about risk management. But the third pillar is psychology. You have to have the psychological skills to not press buttons. You need the psychological skills to press buttons in the right time, at the right time, right? Could you long in here? Sure. Could you short that? Yes. But it's waiting for that to form, okay? Let traders get knocked out, then we can strike. And arguably, anybody who shorted today probably did better than anybody who went long, because the long moves here are okay, but the short moves here are phenomenal. You know what I mean? So that's what trading's about, man. At the end of the day, it's those three things. The successful traders trio: strategy, risk management, psychology. You cannot have two out of the three. It doesn't work. Or it may work a little bit, but it's not going to be, you're not going to see an equity curve that you want. Okay? You're not going to see, sorry, this will be the last thing. I promise this will be the last thing. You want an equity curve that's like this. Okay? You don't want an equity curve like this. This is what you want. And this is how you get that. Okay? Patience, discipline, stillness. Yeah, you might be right, Jordan, if you're talking about this up here. Or up here. I can't really tell. But anyways, that's going to be it. Y'all be good. Be blessed. Go study the opportunities. When the AM sucks, the PM is usually banger. Have y'all not noticed that too? Or is that just me? When the PM sucks, or excuse me, when the AM sucks, the PM's usually a banger. You ever thought about that? Let everybody quit. Let everybody get out. Just like I did. I'm like, ah, fuck, man, I'm not trading today. Boom. Soon as John Phibb comes out and says he's not trading today, bam. Algorithmic principles. Let's go. Boom, 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 boom. Big ass moves. That's how it works. And yeah, sometimes I miss good moves. It's Friday anyway. It's fine. I can afford to miss some moves. It's okay. But We'll be here on Monday, same time, same place. Be good, be blessed. Don't do anything stupid. And I'll see you on Monday.
Mm-hmm.